Okay, this is the Dow Jones, and I've just drawn a couple of lines on there taken from some high volume bars and from the that seem to come in around where we're at the moment. I've also put a fib on from the GFC lows up to our current high, and the 50 fib there is at the 9673, which happens to be around the lows of where we had this bit of accumulation in the middle here around June last year, or March, April, May, June last year. Yeah, so that's that actual area of accumulation there is actually the top of that area has provided some support, and I'm probably faced with a possibility now that they may want to try and possibly want to accumulate in that area again. But anyway, that's the 50 fib there at the 9673, and so we'll just take that off for the time being, and then we'll zoom in a bit. So you can see where they shook the market out. That's the May flash crash and smart money buy on down bars. And that's what they were doing. Smart money have to buy on down bars because of the the professionals, the size of their holdings force them to buy on down bars. So it's the only way they can do it without marking the price up against their own buying. So when they're accumulating, that's how they do it. And we've had our recent crash. If we zero in on that, so high volume down and high volume down again, but this time closing high. And that's shifted the market into a sideways range, and so we're just having a look there to see if possibly there might be some accumulation going on there. So first bar down, high volume, so the professionals are very active along with the herd. Everyone's transacting, but the end result is the price close on the high, not too far from the previous high. Next bar closes lower but on less volume, and that's confirmed by the next bar going up. Next bar goes up but on less volume, trying to penetrate through the shakeout bar, and it's projected on light volume, so that shows there's no interest to the upside there, and that's because they want to accumulate at lower prices, so they're not interested in higher prices yet. Then we get low supply again, so now there's less supply, and that's confirmed by price rising up again. And so we want to see less and less supply. But what's happened now is we've had last week it's collapsed down right to the low. It's tagged the low of our initial shakeout bar. So, and it's been on more volume than we've had on our previous tests down into this area. So that is a little bit worrying because suddenly we don't like having supply close to a support area if we want to be long. Because even though there's buying in this bar, there's a lot of selling as well, and we want to see that selling removed. But if they're bullish, and they want to accumulate, once we suspect accumulation coming in, it can take a while for their holdings to get filled. And if they're having problems getting their orders filled, they will take it down another leg to shake the market out. So because we've got new buyers coming in here, and if they can, they'll put pressure on those buyers if they're accumulating. They may try and take it within the range of where they're accumulating before, around the around the 10,000 mark, or just below there. So that's a bit of a that is very possible. But anyway, so we had some volume coming in down. It's closed off the low, so there's a bit of buying in the bottom there. I'll just go to the daily chart, and I've marked some levels off there as well. So I've taken some levels from some high volume bars in the past on our daily as well, and there's our accumulation zone back in May, and we're waiting for this high volume bar to break one way or the other to know which way we're trading long term. Plenty of trade opportunities in between that range, but for the longer term, and we're waiting for that bar to break. Now, when it breaks, we're not automatically shorting, well, you can, I suppose, for short-term trades, but what we're waiting for then is weak bars trying to push back up into that range for our longer-term short positions, and we didn't get that. It broke down, caught some stops, and came back up. Broke there, but it was a false break. We never got proper testing there, a confirmed test, and then it came back down, and then finally it did break, and then we finally did get some testing, a confirmed test, low supply. It's a bit hard to see there. Next bar closing higher, and that's what we're looking for a longer term entry there. So once they break out, they like to come back and test. They don't like leaving areas of supply behind, and that's because once they've finished accumulating, they want everyone buying, and they don't want to be swamped after buying. They're happy to buy lower, but once they're ready to take it up, they don't want to be swamped with selling. So that's why they bring it back to test to make sure that supply has been taken care of before they can mark it up. But anyway, there's that level there that we're right on top of now. Now look at the recent action. So there's a high volume bars. Here there's a highest volume bar there that's sent us into this range. And there's a low of that one as well. And so we've had a false break of that bar. A couple of false breaks, and we've had possibly a false break there as well. Now we're right on the low of our next highest volume bar there. So as we can see, buying's come in, but there's still a lot of supply there, so they bring it back to test, and if they're accumulating, they'll take it up, trap new buyers in, put pressure on their position to get filled, take it up, trap new buyers. So you can see as the price has gone up, you're getting really light volume up bars, and so there's no interest to the upside, and there's a fair few of those you could have shorted. There was a very shortable bar, was our last bar, and the reason for that is we had a really high volume bar here on this day here, and very narrow spread. So all the buy orders all the buy orders are being capped. With sell orders, comes down and tests first, so we're waiting, but then the next bar tries to go up and no demand through that same area, and we could have shorted that, no problem. Then we get really high volume coming down, closing off the low, and we're not ready to short yet. We're waiting for this to break, and then a weak bar to come, or a couple of weak bars up thrust and a no demand trying to penetrate back up through the underside, and then we can short those. But what we have high volume down. Smart money typically buy on down bars. There's buying in the bottom there. That's confirmed by the next bar closing higher, but it hasn't closed a lot higher, so this is the worry now, because even though there's a bit of buying in the bottom there, there's still a lot of supply at our support line, and if we're thinking of going long, we don't want to have supply or a lot of selling close to a support level. We want to have low supply, low selling. We want to tag them with a very long tail. And also it's high volume, but it's an up bar, it's not a down bar. We don't like high volume up bars, especially if they're narrow. So we don't really know the outcome of this battle here going on. There's a lot of activity there, but we don't know the outcome of that yet. We want to see if they've been absorbing the selling in the bottom there, and we want to see this bounce through, follow through next week. See, once we've got a whole heap of buying came in on this bar. We didn't know it at the time, but that's what was happening. And what gave us the clear was the next bar shooting up again quite easily, widespread, as a demand overcoming supply, but it was high volume up, and then it came back, low volume, lighter volume, so the supply dries up, and then away she goes in the sideways range. But then we see high volume or highish volume down, it pulls up and then springs away. So high volume down, it's pulled up a tad, but not a lot. So so we really don't know. And not only that, it's found resistance on the underside of our supply bar over here. So next week, if we want it, thinking about going long, so we want to see that break to the upside. If it goes further down, then we start looking for possible short trades. We won't short the break, but we'll short any weak bars like these no demand bars, or the combination of up thrusts and no demands trying to penetrate back through that area. We can short probably down to the if we look back at where our previous accumulation zone, down into this area, and we can probably start putting all sorts of little trend channels in for areas to short if we see weak bars going up into that area. That's just one example there, but you probably can get better ones than that. But at the moment, we're still within the range. We haven't broken out of this range yet, so we want to see what happens. We want to see what happens this week to see if it's going to continue up. But anyway, so there was buying in that bar. The bottom of that bar is confirmed by the next bar up, but it's a narrow spread up bar, and we don't like narrow spread up bars. Now it could be it's just because it's finding some resistance on the bottom of this, but we want to see follow through now back into our range to confirm we're still accumulating within this range. Otherwise it's going to break down to, if it breaks, it'll probably break very quickly into our next accumulation zone. So we can probably actually have a look at some pitchforks as well. I'll switch to Pro Real Time, and I'll just switch to the weekly, and I'll get rid of, I'm just doing pitchforks now, so I'll probably one there we can look at. It's probably a bit big, but might get rid of that one. What can we do? Well, there's another big one there, obviously. That's probably a bit big to be useful too. Here we go. What about this one? There's one there that's broken down now. So what we can probably do with that one is put a warning line on it. That's sort of tagged it. Now we can put another warning line on and see if we get a response to that one. We probably can also put a trigger line on it. That might be a bit extreme, but I'll just copy that over onto the next pivot there. That sort of has caught it a little bit. Now we'll just extend this out. Extend that one out. No. Anyway, we can put that, I'll just put that there. We did have a little back test there on that one. I'll probably extend that out again. Oh. Probably not that useful to us like that, but anyway. We've also got probably a pitchfork there we can use. That's sort of, it's a little bit ratty, but it's we're right on the bottom of it, closed right on the bottom tine there. So, but again, the point is we've started trending down now. It's starting to get a bit hard to find an uptrending pitchfork. Maybe on the daily we can see if we can find something. See what Mr. Pitchfork tells us. Can't get that high there, that low there, so that's given us a median, and it's broken the median line and broken our trigger. Now the rule with this is if it fails to hit the median and then breaks your trigger, it's a sell. But it has hit the median first, so it's not an automatic sell. There's a warning there, so we can try this pivot here. A recent pivot point. So it's breaking, they're all breaking the trigger line, so it's not, that one actually has failed just. That's actually a HR failure. And a HR failure, as a little rule says, if it pivots before it should, before a median line, it normally takes out the previous pivot, which it did in this case. So, so I don't have, the point is I don't have a, I don't have an uptrending pitchfork to work with. We've only got downtrending pitchforks. There we go, there's one there. So I'll just have to keep an eye on that. So the trend is still down on the Dow, no doubt about that. And I mean, we've got a, on the weekly, I suppose you could argue, well, we've got this massive big uptrend from here. That doesn't help you when you've got a ways to drop. It's got a ways to drop and you can still be in a massive big uptrend. There you go, we've got a bit of a channel there as well. Might stick that in the middle somewhere. See if I can get that dead in the middle. Oh, there we go. So that's where we are there. We're in the middle of that. We're in the middle of that channel, and that's just a couple things. Oh, here's another one we can do. We can do, what's this one here? It's probably a scarier one. The median's down here at 9.3, 94.10. So there's all sorts of little things we can do like that to give us an idea where the price might pivot if it ever gets near those areas, and they normally have a response to these lines. But from the volume side of things, there's no, the jury's still out as to whether this level is going to hold now or not. We'll have to see what happens on Monday. And if that area breaks, or if we start getting weak bars trying to push back up into this bar here, and then we'll be looking at shorting the, being short on the Dow. So yeah, but anyway, that's the Dow Jones. So we're back at a critical level now, and we're waiting to see which way we want to trade longer term. If we're basing our trade on what the trades and what the Dow is going to be doing. And we've had plenty of short term between the channels, but our short term ones have been our shorts have been our obvious ones. Our longs haven't been so obvious because we're in a downtrend. We've already got weakness to confirm our short entries, but we haven't cleared our strong bars yet, which is these ones here to the upside to tell us we can go longer term. But we certainly had short trades in there, and now we're waiting for it to clear. We don't want to be short this close to the support line. We want it to break. We don't want to be selling the break because it could be a bear trap too, but we want to be waiting for our weak bars to set up, like our up thrust and our combination of up thrust and no demand trying to penetrate back up and being rejected, and that gives us our short view, longer term, or on the daily chart anyway. So anyway, that's the down.